In the next 3 videos, we're going to look at the 3 main financial statements: the income statement, the statement of financial position, and the cash flow statement. Financial statements are an extremely important tool for all businesses, as they allow managers, shareholders, and investors to make decisions on the future direction of the business and to understand how the business is performing over time. It's also important to remember that producing financial statements is a legal requirement for both private and public limited companies, and failure to create these important documents may result in the company being fined. So let's dive in and start by looking at the first of these important financial statements, the income statement. As we know, profit is incredibly important for a business, and the income statement shows how a business gets from its turnover, its sales revenue, to its bottom line profit, the money that it's actually made. To all the teachers out there, show all of these videos without any ads and gain access to our growing library of over 500 teaching worksheets. Why not visit BizzWizard.co.uk to find out more? An income statement shows the revenues and the expenses for a business over a certain period of time. It is sometimes also called a profit and loss statement, as it shows various different ways of looking at profit. The income statement starts off with a positive number at the top, which is the sales revenue from selling the goods or services produced by the business. As we move down the income statement, we then see the first type of cost called the cost of sales. As we have discussed in other videos, when we talk about cost of sales, we mean the direct cost of producing a good or a service. By deducting the cost of sales figure from the revenue figure, we get the first profit figure on the income statement, which is called the gross profit. The next stage is to add up all the operating costs of the business, such as salaries, rent, and office costs. You know, those costs that don't change directly with sales. And importantly, at this point, we don't deduct any tax or interest that the business has to pay. So, this figure, the operating expenses, is then subtracted from the gross profit to give us the next type of profit, which in this subject is called operating profit. And this is the profit the business has before tax and interest is taken into account. And finally, any interest and tax are then deducted from the operating profit to give the net profit figure, the money that is actually left over at the end of the day. You might sometimes hear people talking about the bottom line, perhaps on TV programs such as Dragon's Den. This is another way of describing net profit, and this old expression came about because the net profit is on the very bottom line of the income statement after all the costs of the business have been factored in. So, let's meet our main character for this video. This is Shannon, who is the managing director of an online shoe retailer called Shannon's Shoe Shop Limited. Let's take a look at Shannon's income statement. Bring this video and over 100 more to life with fun, interactive games, quizzes, and case studies. Why not try the first 25 completely free by visiting BizzWizard.co.uk. So, the business generates revenue from selling shoes through an e-commerce platform directly to customers. Last year, it generated £400,000 in total sales revenue. Shannon's Shoe Shop has to buy shoes from the manufacturers to sell on its website. The total spent on these shoes is £130,000 for the year, which is the cost of sales figure. So, to work out the gross profit figure for Shannon's Shoe Shop, we need to take the cost of sales away from the sales revenue, and that gives us a gross profit of £270,000. Okay, now we have the gross profit figure, we need to work out the business's operating profit. To start with, let's take all the operating costs and add them together. During the year, the business's costs are £75,000 of salaries, £50,000 of IT costs, £50,000 cost of hiring the office and the warehouse space, and finally $25,000 of marketing costs. And this means that the total operating costs for the business are £200,000 a year. Once we have this figure, we can work out our operating profit by deducting the operating costs that we've just added up to $200,000 from the gross profit of $270,000. And this gives us an operating profit of £70,000. Now finally, let's look at the net profit for the year, also known as the bottom line. To get this figure, we need to deduct interest and tax for the year. The interest for the year was $5,000, and the corporation paid by the company to the government for the same year was $12,000. So to work out Shannon's shoe shop's net profit, the bottom line, we take the total of these figures, which is $5,000 and $12,000, away from the operating profit of £70,000. When we do this, well, this leaves a net profit figure for the year of £53,000. This is the bottom line for the company, the amount of money that it's left with. So let's take a look at why it's so important for Shannon to have an income statement for Shannon's shoe shop. First of all, certain types of businesses have to produce an income statement for legal reasons, to calculate taxes. As Shannon's shoe shop is a limited company, it will need to calculate how much corporations tax it owes, which is a type of tax that companies have to pay to the government on the profits that they make. Each of the video courses over at BizzWizard.co.uk also includes an interactive business case study that applies the knowledge learned to a real-world scenario. There are over 1,000 multiple-choice questions, each with detailed feedback, which tests students' understanding of the content. Why not visit BizzWizard.co.uk to find out more? Now, Shannon will be able to compare her results to the previous year. She can compare the business's profits by looking at the income statement for different years side by side, especially if she calculates profit ratios or, as we know them, margins such as the gross profit margin, the operating profit margin, and the net profit margin. And if you're not too sure how to do this, you should take a look at the videos covering gross and net profit. By showing these figures as percentages, it helps businesses see trends in percentage terms, so Shannon can see if her performance is getting better or worse. Shannon can also compare these profit ratios to similar companies, which might give her some ideas as to improvements that she could make. The final reason for producing this important document that we will consider is that it is often needed to share with key stakeholders of the business, like managers, investors, or if it's a company, its shareholders. And this document helps these shareholders better understand how the business is performing and how this might impact them directly. Now, although there are many reasons to complete an income statement, it does have a few limitations. It's a great document for examining the profitability of a business, but it does not provide data on the expected future growth. It does not give any indication of how the sales were generated, or how more could be generated. Basically, it's one small piece of the puzzle, and other important business planning documents will be needed to truly see the full picture. There are two other main financial statements which will need to be prepared for Shannon's shoe shop. These are the Statement of Financial Position and the Cash Flow Statement. Join me in the next video where we'll begin to look at the Statement of Financial Position and add another important skill to our entrepreneurial toolbox. This has been the BizzWizard. See you in the next video.